Welcome to the award-winning Real Estate Mortgage Shop, where home buyers, homeowners, and investors get practical mortgage and real estate insight straight from the pros with your host, Joe Garner.
Good morning, Memphis, and welcome to our internet listeners and our podcast listeners across the 50 states. You're on Real Estate Mortgage Shop, and I'm your host, Joe Garner. I'm a mortgage loan originator. Connect with me at jogarner.com. Our topic today, it's April 18th, 2026. It's keep more money in 2026. Keep more of your money. Inside tax strategies from your mortgage pro and your CPA. Thank you to Realtor Becky Trim. She's an eXp Realtor in Fayette County, Tennessee, for sponsoring this episode of Real Estate Mortgage Shop. For buying or selling your home in the tri-state area, Becky Trim is an experienced realtor who is knowledgeable and ready to help you. Contact Realtor Becky Trim, 901-517-6233, 901-517-6233. But in the studio for the very first time, I love this guy. I've met him before and talked with him, been very impressed with him. For the first time in the Real Estate Mortgage Shop studio, we have Zwillis. He's a certified public accountant with Watkins Uiberall Tax Firm. Zach, you played baseball for University of Memphis, and now you're helping your clients hit a home run, saving money on their taxes. And then for over 10 years, you've been working with a variety of clients. Take a moment and tell our listeners a little bit about yourself, Zach, and what you do for your clients.
Certainly. Thank you, Joe. Didn't hit too many home runs in my playing days, but I certainly enjoy hitting home runs for saving my clients some money. I specialize in serving closely held businesses and high net worth individuals through all their growth challenges and the ever-changing tax code. From startups to estate planning, I enjoy getting to know my clients, their specific situations, to see how we can better utilize the tax code to their advantage and their long-term goals.
Well, you work with a lot of privately owned companies, not big corporations that are on the Dow or anything.
That's correct. We don't do too much with publicly traded companies, so it's a lot of closely held. A lot of the companies that you drive up and down Poplar Avenue, those are our clients, Memphis community.
Well, Zach, how is the best way for us to contact you?
Thank you. One of the best ways is go to our website at wucpas.com. There you can see all the range of services and professionals that can provide for you.
All right. Well, that's Zach Willis. You want to contact Zach. But from the mortgage desk, I want to ask our listeners, are you currently renting your home? If you plan to move out of the geographic area in the next 24 months, it probably makes sense for you to continue to rent. But if you're trying to decide whether to rent or buy a home, here are some compelling reasons to consider taking the path to home ownership. The National Association of Realtors last year did this study, and they found that the typical U.S. homeowner currently has a net worth of about $430,000. Okay, that was from the Federal Reserve Survey of Consumer Finance, for those of you who are researchers. In comparison, the net worth of the average renter is just about $10,000. So, to put it simply, the average homeowner is 43 times more wealthier than the typical renter. Okay, that's a compelling reason enough. But real estate wealth building expert Robert Kiyosaki, he's the author of Rich Dad, Poor Dad. If you hadn't read that book, I would read it. I've read it more than once. But he says, here's your strategy. Kiyosaki uses good debt to purchase real estate and assets which generate cash flow. So debt that he buys that creates a cash flow he considers good debt, and which in turn pays off that debt. Number 2, scale. As of 2025-2026, Robert Kiyosaki reportedly controls over 15,000 rental properties and holds roughly $1 billion in debt, but again, smart debt. Ownership. Much of the wealth that Robert Kiyosaki holds, he holds it within companies, sometimes under his wife's name, sometimes under other names, to protect his assets. So minimizing the tax burden. Depreciation and expenses. Mr. Kiyosaki utilizes non-cash deductions such as depreciation a non-cash paper expense. That's not a real expense. Mortgage interest, property taxes, repairs to offset positive cash flow. Tax-free cash. By borrowing against his properties, he receives funds that are not considered taxable income. Talk to your tax accountant. Make sure you're doing it right. For his philosophy, he argues that real estate allows investors to use the tax code to gain wealth, treating taxes as a legal way to pay nothing by following the tax laws. Okay? So your mortgage is one of the biggest loans you're ever going to get in your lifetime. How can you use it as a wealth building tool? Well, if you own a home, follow me for some ideas on how to make your personal home pay the mortgage off early and provide you an income as you live there. I've done it myself. I've had several clients teach me a lot of cool things that you can do to make your house pay you. Real estate is a unique investment in the United States because you can pay a very small amount down and take control of a very large asset. Generally, in real estate, and I tell people, I say, where can you get an investment like this that when you buy it, it goes up in value and income. You know, if you're renting it out, the income goes up and the value goes up. You don't have to choose whether you want a growth investment or an income investment. They're both. That's the beauty of real estate. If you own a lot of real estate, rent it out, have other people pay off your mortgage. For senior-aged homeowners, look into how a reverse mortgage can provide money for you without creating taxable income. Work with me on your reverse mortgage and your tax accountant. Work with your tax accountant. Maybe get a hold of Zach Willis here to see how that works. What do you want to accomplish with your mortgage? I can help you find the right mortgage, and we'll make that process easy. Connect with me at jogarner.com. But I want to pivot over to you, Zach Willis. You're a CPA with Watkins Uiberall Tax Firm. Let's take a few minutes to start jumping in until we go to break, and then we'll continue when we get back. What are some ways that we can reduce what we pay in taxes in 2026, Zach?
Absolutely. There are a lot of ways. Before diving in, I'd like to note, the information discussed here is for educational and general informational purposes only. Individuals should contact their tax professional regarding their specific situation.
Absolutely.
With that said, I want to start with something that I think a lot of listeners in the area will be curious about. This past summer, the One Big Beautiful Bill signed into law last July includes a brand new deduction designed for Social Security tax relief for seniors. This is sometimes called the senior deduction. So here's how it works. If you're 65 or older, by the end of the year, you may be eligible for an additional deduction of $6,000 or $12,000 for married couples filing jointly where both spouses are 65 or older. Think of it as a bonus on top of the existing standard deduction.
Right.
So it's available for both itemizers and those who take the standard deduction.
Oh, really?
That's right. So it's claimed on the new Schedule 1A. There are income limits, so the deduction begins to phase out as your adjusted gross income exceeds $75,000 for single filers or $150,000 for married filing jointly. It's a temporary provision. It's effective for tax years 2025 through 2028. So if you're a senior on a fixed income or you have a moderate pension alongside Social Security, this deduction could meaningfully reduce what you owe. Even if you have already filed for 2025, it may be worth reviewing whether you captured this benefit, and if not, an amended return could be in order.
Oh, awesome. That's a great idea.
Yeah, absolutely.
Now, what's that age again that for
65.
seniors? 65.
65 and older, that's right. And now I want to switch to something I think particularly on your show people might be interested in is the new private mortgage insurance deduction. So this was a deduction available to taxpayers in the past, but it had previously expired. So with the One Big Beautiful Bill, this is now back as something we can claim.
Oh, good. Yes.
That's right. So PMI, as it's known, private mortgage insurance, is once again tax deductible beginning in tax year 2026. So the premiums you pay, the private mortgage insurance premiums you pay as a part of owning a home, this especially relates to first-time home buyers. It had expired again in 2021. Now it's back. Once again, there is subject to a phase-out. So the full deduction is available for homeowners with adjusted gross income under $100,000. And that threshold is the same whether you are single or married filing jointly. So for moderate income homeowners who put less than 20% down, this is a real benefit. If you're paying PMI, make sure your tax preparers capture this deduction.
Yes, and you should have it on your year-end statement, and sometimes they'll have it on your regular monthly mortgage statement online, or if you get it in the mail. So
Absolutely
be
right.
sure and turn that into your tax account.
Absolutely right, and that form you reference is Form 1098 MIS, Mortgage Interest Statement.
Okay.
Additionally, as previously in itemized deductions, you can take your mortgage insurance premium or mortgage interest payments as a deduction. But there's a cap on that. So if your mortgage is over $750,000, the interest deduction eligible is limited.
Okay.
So for those that have, and this has now been made permanent, so it allows you for more secure tax planning because you can know what to do with it. So if your mortgage at the end of the year is over $750,000, your interest is limited on what you can claim as a part of your standard deduction.
Okay. Well, you're on Real Estate Mortgage Shop. I'm your host, Joe Garner. I'm a mortgage loan originator. What do you want to accomplish with your mortgage? I can make the mortgage process easy for you with the right mortgage. Connect with me at jogarner.com. When we come back, we're going to be hearing more from Zach Willis, CPA with Watkins Uiberall Tax Firm. And after this break, we're going to bring Brandy Spicer of Howling Wolf Bookkeeping. She'll be joining us. We love Brandy. She takes care of our bookkeeping, keeps us in the black as best she can. But we appreciate you guys listening to us on Real Estate Mortgage Shop. We'll see you guys back in just a moment. Real Estate Mortgage Shop provides general information, not an offer to lend. Joe Garner, Talk Shop Real Estate Mortgage Shop, does not endorse 100% of the information covered on Real Estate Mortgage Shop. Consult with your certified advisors before acting on any information given on Real Estate Mortgage Shop. Joe Garner is a licensed mortgage loan officer, NMLS 757308, Equal Housing Opportunity.
Hello, I'm Ken Sullivan with Tax Matters Solved. You're listening to Real Estate Mortgage Shop. Now back to your host, Joe Garner.
All right. You know what time it is. It's time for Comic Queries. You probably already know the answer, but we're going to ask you anyway. Zach, what have you got for us?
Thank you, Joe. What's the definition of a fine? Now remember, we're talking about taxes today.
Yes. All right. Well, so Zach, what's the definition of a fine? Think about Mark Twain. Right. Remember his saying?
How about a tax for doing wrong?
Yeah, that's right. That's right. Well, what's the other part of Mark Twain's saying?
What's the definition of a tax?
Well, it's a fine for doing well. Hats off to Mark Twain. He was really right about that. But today on Real Estate Mortgage Shop, we're talking about keep more of your money in 2026 insider tax strategies from the Mortgage Pro and your CPA. I'm your host, Joe Garner. I'm a mortgage loan officer for your home purchase or mortgage refinance you can brag about. Let's talk. We can find the right mortgage and make that process easy. We can do that on a traditional loan, special program, or outside of the box program. Connect with me at jogarner.com. Zach Willis, he's a CPA with Watkins Uiberall Tax Firm. And Zach, how does the best way to contact you?
That's great. You can reach me at 901-761-2720.
All right. Well, we're going to do something we like to do almost every week. It's the Talk Shop tip. And Talk Shop is one of our major sponsors of Real Estate Mortgage Shop. Talk Shop offers free networking and education to our local business community. And if you join the Talk Shop sponsor team, you can get a wide variety of marketing venues at below market price. To go to talkshoppe.com, find out more. But Brandy Spicer of Howling Wolf Bookkeeping supports our business and real estate community by her contributions to free networking and education offered through Talk Shop. Brandy, you've got some wonderful reviews from businesses that you serve. We love you as our bookkeeper. And, as a bookkeeper, Brandy, you can save people time and you can help give them peace of mind. What is our tip from Howling Wolf Bookkeeping today?
Well, since we're talking about taxes, my number one advice is don't get your tax advice from TikTok.
I'll say amen to that.
Exactly. TikTok is a wonderful platform, and you can get lots of good ideas from there, but please don't institute any policies or make any changes until you vet that information with your tax prep professional.
Yes.
It's very dangerous. I'll just put it that way.
Well, and you keep us on track when we need to report things, and you keep us on track when there's any abnormalities. I mean, you are terrific as a bookkeeper.
Well, thank you.
And we've got Zach Willis, our CPA, in the house, and absolutely, if you have gotten something that you think is interesting and you want to talk about it with a tax professional, I would talk with Zach Willis. And Zach, you've got some more. You started out talking to us about some great tips in the first segment. Let's keep on going with that.
Certainly. I'll keep it in the wheelhouse here and talk about HELOC, home equity lines of credit. So there are some interesting tracing rules, is what it's known as, regarding HELOC. So if you take out a home equity line of credit and you use that money for improvements on your home, then the interest paid on that HELOC is a deduction, as an itemized deduction, similar to the mortgage interest we were talking about earlier. Likewise, if you take out your HELOC and you use that money for investments, that's now investment interest. See, it's tracing it through to what you're using that money for. So if you take out a HELOC and you use that money towards your business, that's a business interest expense. So if you're taking out a HELOC and you say you go on a family trip or using it for personal reasons, now that home equity line of credit interest is no longer deductible. So you have to be careful about tracing your HELOC on what it's being used for to determine its deductibility.
How do we trace that? How do we document that?
You personally, through your own records, or your bookkeeper
good
can
bookkeeper,
certainly help with that. That's
Randy.
exactly right. Yeah, so contact your CPA, your bookkeeper, or keep track of your records yourself. So it's real simple. There's no, you do get a Form 1098, but it's up to you as the individual to trace what you're using that and telling your professionals so they can help you out with that. Moving forward, I'd like to discuss something that's new this year. It's new personal car loan interest deduction. So, as always, if you bought a car and you used it for business purposes, well, you're able to depreciate that car. You're able to take the interest on that car loan as a deductible business expense. But if you just use it personally, there was no deduction for you. Well, now there is, and this was starting last year. What's new for 2026 is there will be a form that your actual loan provider will send you, similar to the mortgage interest statement. Now you're going to get it Form 1098 VLI, that's vehicle loan interest. So to qualify, the vehicle must be new, it must be assembled in the United States, and the loan must be the original purchase loan.
Assembled in the United States.
That's exactly right. So it doesn't have to be manufactured here, or all the parts have to be made here. It just has to be assembled in the United States. And there are multiple ways you can go online, but primarily I would talk to the Honda or Nissan, whoever you're buying the car from. They should be able to tell you what you need to know about that. I imagine they're going to be pushing that pretty hard to move cars off their lot. That's right. So to qualify, it must be assembled, new, and the original purchase loan. So if you refinance later, the interest on the refinance portion may still qualify, but it has to originate on the original car. Again, there are income limits to this, so the deduction phases out as your income increases. There are separate limits for single filers and married filing joint. Another one that's new this year is no tax on tips and no tax on overtime.
Ooh, wow.
That's right. So those people that traditionally work in industries that have tips, unfortunately, it doesn't apply to me as a CPA.
Or me either.
Yeah, that's right.
Same.
Yeah, that's right. So, if you're in the, say, food services industry, a server, bartender, hairdresser, valet, you can now claim a deduction for your tip income of up to $25,000 per tax return. And so that's excluding entirely from your income.
Wow.
Similarly, no tax on overtime. Again, this can be tracked by your employer, but it's based on the Fair Labor Standards Act. So once again, professionals such as myself, CPA, overtime doesn't count. But if you're in an industry that normally tracks overtime, that's one.
And charitable giving.
Absolutely, that's a big one that just came about. So the two things that came on is there's now a floor. One of the best ways I recommend getting around that new charitable deduction floor is there is a qualified charitable deduction. So if you have an IRA, you can do a QCD or track your expenses. Even if you don't itemize, there's now above the line deduction for your charitable giving. So even if you don't itemize your deductions, but you're still charitable, you're inclined, go ahead.
You're on Real Estate Mortgage Shop. I'm Joe Garner, your host. I'm a mortgage officer. I can help you on your home purchase or refinance. Connect with me at jogarner.com. Zach Willis, CPA, how do we contact you?
You can contact me at our website, wucpas.com.
And Brandy Spicer, Howling Wolf Bookkeeping.
HowlingWolfBooks.com.
We'll see you guys back in just a moment.
You're listening to mortgage expert Joe Gardner, author of Choosing the Best Mortgage, The Quickest Way to the Life You Want. And she has a golden nugget from her book. You can order Joe's book on Amazon and Barnes & Noble. Hey, Joe, you talk about treasure hunting in your book. Can you tell us what that is?
Treasure hunting from funds to close. There's still 100% loan programs out there, down payment assistance, gifts from family, cash value on life insurance, and lots of ways that you can find money you didn't know you had.
Order the book today. You'll be glad you did.
Hi, I'm Brett Bernard, investment team leader of the Stamps Real Estate Investment Division. Right here in Memphis, Tennessee, you're listening to Real Estate Mortgage Shop. Now back to your host, Joe Garner.
Well, did you know today we're going to ask you a question that we think you're probably going to know the answer before we do. So for Did You Know today, Brandy, I think you've got some questions for us.
So what are the top 3 companies paying the highest taxes to Memphis and Shelby County, Tennessee from years 25 to 2026?
I feel like 2 of these are probably pretty obvious. Take a stab at FedEx.
Yeah.
Yes,
all right.
They're number 1.
Okay. International Paper.
Number 3.
Okay.
So,
and, this next one I'm going to take a stab at. I probably wouldn't have known it if I didn't just hear Ted Townsend from the Memphis Chamber talk about it. But XAI, is that the one?
Bing, bing.
Ding, 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 ding.
You win.
You win the cookie. So actually, XAI is the controversial new player in town and may soon be capturing the top spot for taxes paid in Memphis and Shelby County.
Y'all are so smart. I'm so glad to have you on Real Estate Mortgage Shop. Well, today on Real Estate Mortgage Shop, we're talking about keep more of your money in 2026 insider tax strategies from your mortgage pro and your CPA. I'm Joe Garner. I'm a mortgage officer. I can work with you whether you're in the Mid-South or anywhere in the country. I would love to have a chance to hear your story and find the right mortgage that will give you some bragging rights. Even if you're buying a home or refinancing, connect with me at jogarner.com. You can call, text 901-482-0354. Zach Willis, CPA with Watkins Uiberall Tax Firm. How do we contact you, Zach?
You can contact us at 901-761-2720.
And Brandy Spicer of Howling Wolf Bookkeeping.
901-593-9369.
Okay, so this was a long time ago. This guy came to Talk Shop, changed my whole way of looking at real estate. I mean, I had some idea, but this really opened my eyes. And he is now multi-millionaire, and he's just living the life. I mean, the life of Riley. But I want to talk about working smarter, not harder, to build wealth owning real estate. And Raymond Ridley, now this is not his real name, started out as a real estate agent helping people buy and sell homes. Raymond could see how his clients prospered buying their own homes. He said, I want in on this home buying thing too. But Raymond made quite a lot of money selling real estate as an agent. But at the end of the year, he paid about half of his income in taxes to the IRS. Well, Raymond got smart. He started gradually buying and keeping real estate for himself as a hedge against income taxes and inflation. He shared with a group, and he shared with us back in 2006, I think it was, Talk Shop. he said one of the surprising benefits from buying a lot of rental properties is that he hired his kids to work with him, fixing them up. So it was another tax break for him, but it was a way for the rental renovation projects to bond the family and created some great memories and life lessons too. So it went way further than just money. So work harder, not smarter. Raymond Ridley, the licensed real estate broker, he was a full-time investor, he has successfully owned and rehabbed over 500 homes and apartment units. Started out as hard-working moneymaker realtor, but having to shovel half of his income to the IRS was not his cup of tea. So here was his answer. He told a bunch of his real estate investors and realtors, he said, I probably made more money in real estate than anybody in this room, and I probably lost more money in real estate than anyone in this room, but I've made more money than I've lost. And here are 6 reasons he shared with us about why he invests in real estate. Number 1, cash flow on rental property. It's it's a way for you to have a passive income source. Now, you have to include the taxes and the insurance and association fees and all that. And if you plan to keep the rental house for a long time, the 30-year fixed rate mortgage is a great tool because it's fixed. It's never going to go up, but your rents that you get are going to go up over time. So that creates a larger and larger passive income source. Number 2, appreciation is the rate that the house value increases every year. Raymond pointed out that there's a direct correlation between positive cash flow and appreciation. Cash flow is usually less per month in areas where the houses go up in value faster, but it's still a good investment. You're still gaining value and gaining income. Number 3, real estate can provide a wonderful tax shelter, enabling an investor to make a 6-figure income and pay 0 taxes in some cases. Raymond confessed that sheltering almost all of his income was where he learned how to work smarter rather than harder. Back then, he said to shelter $50,000, this is 2006, to shelter $50,000 per year in income, an investor would need approximately $1 million in real estate. He prefers to have 10 houses valued at $100,000. Today, it'd probably be like $200,000. Over 30 houses valued at $30,000, or maybe today, maybe $70,000 or $80,000. With 10 houses, he only has 10 tenants and 10 potential dramas, he said, which sounds a whole lot better than 30 tenants with a potential of 30 drama situations. Very smart guy. But here's another one. Thanks to amortization, with each mortgage payment that Raymond made on his mortgage and paid it down faster, he gained even more wealth, even more equity, because now the house is going up in value and the mortgage he owes is going down. What a beautiful thing. 5th advantage owning real estate is leverage. Real estate is one of the few investments that allows the investor to borrow almost the entire value of the investment without a large sum of money. You can buy a $500,000 house with probably less than $50,000 and have control over a $500,000 asset.
That's right, yeah. There's a lot of different ways to go about doing those things, and taking advantage of the value of that property. Banks are, if you got a good line of credit, banks are always willing to meet you halfway on those types of things.
I know. I love it. I mean, I'll go back. I was talking to somebody at the Memphis Investor Group luncheon. It's our landlord and investor luncheon we do at the butcher shop every Friday. I said, man, I love real estate. And I was talking to somebody just getting into it. I said, you go to buy a stock, they're going to say, do you want growth or do you want income? But in real estate, you got both.
That's a great point, yeah.
And you don't have to pay $50,000 to get $100,000 to get a $100,000 valued asset. You can pay $5,000 and control $100,000 or $10,000 to control $200,000.
One of the other benefits to that is there's a lot more risk in stock than there is in seeing a house and being able to touch a house and being able to, look at this house and say, oh, that's mine. How nice.
I know. Another investor that I do business with a lot, he says, Joe, if I can't touch it, taste it, control it. I don't want it. I can't control my stocks. Now, I do have, we all have a little bit like 401ks and stuff, but he said, I want to be able to control and know what's going on. And so there's another aspect to real estate.
There's a difference in seeing a number on a page and seeing a house on a street.
That's
with a tree in the yard, all of those things.
Long gone are those days where you have the physical stock certificate or a bond note, that you're taking back in your safe deposit box. So everything being digital, there's something about real estate that's nice.
Oh, yes. There is. Well, there are some barriers to owning a home, and there are about 4 of them that I deal with every day. But you know what? Here's the good news. There's a mortgage for that. There's a solution for that. Whatever it is that you run into, if you've been told no or you've been told you can't do that, I want you to call me at 901-482-0354. I can help you find a solution. Lack of funds to close is one of them. Hey, look, there's a lot of down payment assistance programs out there. And for investors, I can show you a way to still get in for zero down. Lack of funds to close, so we can fix that. Number 2, lack of enough qualified income. I know how to read the tax return from the back to the front and add back these paper expenses, if you will. And there are special programs that look at other things like bank statements instead of tax returns. So if you're self-employed, call me. Number 3, my credit's got some little dings in it. Well, go to annualcreditreport.com. You can take your own temperature on that, but call me. There are things that you can do quickly to really help your credit so that you can qualify for a mortgage. Number 4, appraisal comes in low with a list of repairs. That's a whole nother animal. There's a mortgage for that. I can help. You're on Real Estate Mortgage Shop. I'm Joe Garner, your host. Thank you for listening to us. For your home purchase or refinance, call me, text me, 901-482-0354. Zach Willis, CPA with Watkins Uiberall. How do we contact you, sir?
Great. You can find us at our website, wucpas.com.
And we've got Brandy Spicer with Howling Wolf Bookkeeping in the house. How do we contact you, Brandy?
HowlingWolfBooks.com.
All right. So, hey, we're talking today, showing you how to keep more of your money in 2026, insider tax strategies from your mortgage pro and your CPA. Stay tuned. We've got more to come. When we come back, we'll see you guys back in just a moment.
I'm Craig Jennings with Avalon Capital, Memphis, Tennessee, and you're listening to Real Estate Mortgage Shop. Now back to our host, Joe Garner.
Insights and inspiration. Paying little or no tax legally. This person is one of the wealthiest people in the world and pays little or no income taxes legally. He learned quickly the tax loopholes and began using them right away. As the value of his company stock grew, he simply did not sell it. As other assets ramped up in value, he did not create a taxable event by selling anything. He borrowed money cheaply to continue to live well and build more wealth. These low interest rate, low cost loans were secured on his valuable assets without ever selling the assets. How smart is that? So, Amazon's founder, Jeff Bezos' wealth builds even faster because he is not hampered with paying high taxes each year. What money-saving, wealth-building loopholes can you find to use for yourself today? Check with your certified public accountant. Let's explore some mortgage structures, too, that might be able to help you. Call or text me today. I'm a mortgage professional, 901-482-0354. I can help you find the right mortgage and make the process easy. jogarner.com. But today on Real Estate Mortgage Shop, we're talking about keep more of your money in 2026 insider tax strategies from your mortgage pro and your CPA. I'm your host, Joe Garner. I'm a mortgage officer. Connect with me at jogarner.com. Zach Willis, CPA with Watkins Uiberall Tax Firm. How do we contact you, Zach?
Great. You can reach us at our website, wucpas.com.
And Brandy Spicer, Howling Wolf Bookkeeping. How do we contact you, girl?
901-593-9369.
You know what that means. It's time for our real estate tip of the week. But whatever your tip, it doesn't have to be specifically real estate. But Brandy Spicer of Howling Wolf Bookkeeping, what's our tip today from the bookkeeping desk?
So mine is a continuation of my previous tip, which was don't get your tax advice from TikTok. So you wouldn't trust your beautician to do your brain surgery. They both work with heads, but it's completely different. So don't let someone with questionable credentials give you bad advice that can get you in hot water. Use TikTok as a platform to then go talk to your tax prep professional. It's crucial that you vet all of that information that you're getting to make sure that you're doing things in the proper way and that you can trace all of those deductions, like Zach was talking about earlier, that you have the proper documentation, that you are able to use all of those things that you found on TikTok the right way to help you and not hurt you.
Well, and you as a bookkeeper really help small businesses keep things organized so that they can track what they need to document.
Yes.
And we love you at Talk Shop.
Well,
so
thank you.
Zach Willis, CPA, Watkins Uiberall, what is our tip? What is our tip today from the CPA desk?
Well, hopefully two quick ones. Doesn't mean they're not complex, but one, if you're like our friend Raymond and you have multiple properties, you might qualify as a materially participating real estate professional. It's a pretty complex area of the tax code, so be sure to contact your advisor. But it's a great way to take advantage of your multiple properties and reduce other earned income. Another, likewise, you have multiple properties, would be reviewing if a cost segregation study is worthwhile for you. That's a way to accelerate a lot of this depreciation we were talking about. Instead of over the life of the property, you can get it almost immediately.
Awesome. How do we contact you, Zach?
901-761-2720.
We want to say thank you to our sponsors that put us behind the mics for you today, and that's Talk Shop. Talk Shop equips with education. They offer free education and networking to anyone interested in real estate, in business, or health and wellness. They have a meeting every Wednesday, 9 o'clock Central Time at the Independent Planning Group's conference room, Clark Tower in Memphis, 5100 Poplar, first floor. Thank you to Ben Hunter, an outstanding financial professional at Independent Planning Group, for being our Talk Shop's location sponsor. Talk Shop on Wednesday, April 22nd, 2026. Join me at Talk Shop as I present Roadmap to the Life You Want with Traditional and Outside the Box Mortgages. So join us. And I want to say a special thank you to Andrei Lisovsky. He is a finance student at University of Memphis and he's a U.S. Army reservist. Thank you. I want to thank him for his service, but he volunteers his time and his talents to support our local business community at Talk Shop. He's a very smart, dedicated hard worker looking to work in capital budgeting and financial modeling for big companies like FedEx or AutoZone or First Horizon. If you can connect Andre, we would just be so happy. Call or text me at 901-482-0354 if you can connect Andre Lisovsky. But I've got him in the studio. Andre, say something to our listeners.
Good morning. I'm looking for part-time job opportunities and internships in finance field, preferably bigger companies. Thank you.
Well, I can't brag on him enough. You'd have an awesome person, very smart, talented. But make your plan. Let's work your plan if the deal works for you today. Let's do it today. Subscribe. You'll get our weekly Real Estate Mortgage Shop podcast with show notes. You can do that at jogarner.com. From the quote corner, I have one from some e-cards. It says, I believe we should all pay our tax with a smile. I tried, but they wanted cash. Zach, you've got one.
Yeah, so Ben Franklin said the only certainties in life are death and taxes.
Death and taxes. Very encouraging. Do y'all have anything you want to add?
Well, I just want to say thank you for having us on the show. It's been a joy, and hopefully we've been able to give some good tips to your listeners. There's plenty more. The tax code's voluminous, so don't hesitate to contact us. There's a lot of ways we can go about saving you taxes.
Zach Willis, he's a CPA with Watkins Uiberall. How do we contact you?
You can reach us at our website at wucpas.com.
And Brandy Spicer, our with Howling Wolf Bookkeeping. We love you, Brandy. How do we contact you?
HowlingWolfBooks.com.
And you can contact me for your mortgage or your refinance if you're in the Mid-South or anywhere in the United States. You can do that at jogarner.com. We're here. We're real people. We're really listen to your story, and we'll help to tailor those services to what you specifically need. And we thank you again for listening and for subscribing at jogarner.com to get our weekly podcast. What can we do to help you? You guys have an awesome weekend. And, hey, we love hanging out with you. Mm-hmm. We got Zach Willis, CPA, Brandy Spicer, Howling Wolf Bookkeeping. We've even got Andre Lasovsky in the studio with us, and I'm Joe Garner. Check out our podcast and sign up, and we'll see you guys back. And that would be next Saturday. See you then.